Hey, what's up? What's up? Good day. Super excited. How are you doing? You're welcome to my Owolabi channel. I'm really excited. Good to have you guys on my channel. If this is your first time, make sure you click on the subscriber button and also on the notification bell. And make sure you also like this video because we're bringing a lot of value for you guys. This is how we can make things we can make the videos reach out to a lot of people that really do need this. Come on, guys, click on the like button. You're welcome one more time to the financial trading culture series, where I talk about the breakdown of several assets when it comes to the cryptocurrency, the Forex market, and also in the stock market. Okay, if you missed the first episode that I shared with you guys when I was about to go into AUDCHF, I will pick AUDCHF in the community. Make sure you watch the video. The link will be at the top left so that you can understand how the journey is. So back to where we are right now. See, we saw certain moves that made us to know that this was ready for a downward move. Okay, and if you have watched the video, you will agree with me that we have the peak of the market here and we have the low of the market here. Okay, and this is the equilibrium, guys. This is the equilibrium. The equilibrium is the middle. This is the peak of the market, which is the higher curve and the lower curve of the market. Now, what you want to always do is to look for buy opportunities in the lower curve of the market, because the lower curve of the market is a place where the market has the potential not to break. Okay, good. So we're looking for ways to come into the market while we're looking for ways to come into the market. However, we need to patiently wait for the conditions to be met. Now, you can see that there is a break of structure here, which is also a change of trend. And that gives us an impulsive move that I always talk about. When you don't see an impulsive move, you don't want to put your money. No matter how much you want money. You must understand that the impulsive move is what shows the sign of the investors, that is, the institutions in the market are ready to come into this currency. Now, when we have that impulsive move, a lot of time there will always be a retracement. Okay, there will always be a retracement, and if you know how to use Fibonacci and the rest of that, you understand that you will be expecting maybe 78.6 or 50.6 retracement. However, as an institutional trader, we could use the 50% of this sell to buy candle. Okay, 50% of this sell to buy candle. So indirectly, we're actually looking at the market to come back to this zone. Okay, so when the market comes back to this zone, it makes a lot of sense for us. And if you actually use your Fibonacci, you also know that it's coming in below that zone or around that zone for a 78.6 retracement. So that is exactly what we are expecting. So we have seen this as an impulse move, and I've always told you that whenever an impulse move takes off, you don't jump in. See, one of the prices an investor pays is patience. And I know a lot of us, we are intraday traders or scalpers. We just want to catch every move. But guys, the main moves are not in the real money you want, or the real money I want, is not in the daily trading, guys. It's not in the daily trading. The real money that we want is to be able to wait patiently to catch the moves. Even if you're a scalper, you're an intraday trader, you always want to wait. So there's a power of waiting when it comes to trading. So right now we're actually waiting for the impulse, the correction, sorry, because we had the impulse already and the impulse have moved high. This is very good, which is a sign of, so right now we're expecting a retracement back into this zone. And while we are expecting the retracement back into this zone, you can see that the market created a rally-based drop, which is a sell zone for us. So when I saw this sell zone, I realized that the market has actually also confirmed when it broke outside this buy candle. So this is an aggressive sell. An aggressive sell means that the market did not go far away from the zone that was created, and the market retraced back to that zone and start dropping. So this is an aggressive sell, and that is exactly what we used to catch in this sell. So we're expecting this drop down, and because this is an impulse and this is a correction, it means that it's going to be a very, very rough one. And when I mean rough, so you can see something like this, it will come down. It could also go back to the top again, then come down. So this gives us like the waves for those who understand wave count. Okay, so right now we're expecting that sell in this zone, and that is exactly what happened. And when that happened, we went from monthly time frame to weekly to daily time frame. And on daily time frame, we're able to catch this move. So for those who knows how to use the Wyckoff rule, this is the PS, this is the buy BC, this is the uptrust, okay, and this is the ST, and this is the uptrust. So we have the uptrust dropped lower, and the market broke this zone, and the market retraced back here for our opportunity to sell. So a lot of times, this is what is needed in the market before you put in your money. And I remember vividly when this market broke the change of trend right here, this became our area of interest. Okay, so having understood that this is our area of interest, we went deeper into this zone, which is amazing, guys, amazing. Okay, so let's pick from here. We got into this place and we went as far as 30-minute time frame. So when the market hit that zone, guys, that is where patience is also required. Because if you have gone in from this zone, guys, this would have been about 61 pips stop loss. And that would be a lot of risk. And that is not my way of trading for a lot of you that have been following for a while. In the institutional trading concept community, we are so much after what we are risking. And that is why we are not an active trader or we trade every day. We don't. We have our days of the trades of the weeks that we trade, and we make sure that we do not do anything outside the rules of engagement. Okay, and as the strategy is a textbook strategy, which means that everyone should be able to follow it. So when we saw that move, I realized that we needed to wait for a sign of confirmation that shows that the market was ready for that sell. Okay, so when that happened, the market came down. And when it came down, we realized that, oh, there's still a lot of move that the market is trying to do right here. And we saw this pull down back into this zone. And we went as far as 15 minutes to be able to catch this sell, buy to sell candle. Okay, and the buy to sell candle made a lot of sense to us because that is what we are dealing with. And we are able to reduce our entry from 43 pips to about 7 pips, 8 pips. And that is what we're talking about, guys, for you to be able to reduce your entry. See, a lot of you are after making money, but always ask yourself, this is my strategy. What am I willing to risk? How can I reduce my risk? How can I find a way to reduce my risk so that I can use this to make a better entry for myself? And immediately the market came back up, it came to tap at our entry. And as usual, I always recommend that you come out at your first take profit as 1 to 5. Why? Because your hormones or your body that has done the work need to see some excitement. So what keeps you happy in this, what keeps you motivated in this business is to see a strategy that is working and to also be able to bank in some amazing profit share. Because you don't want to say, oh, because I know that this trade is going down, I don't want to come out of it and I'm not going to be taking any profit. So I always recommend that you come out at 1 to 5, 1 to 10, risk reward. Then you leave the rest to go. So we had a take profit 1, 1 to 5, and take profit 2, 1 to 10. And that's how we rock and roll these rules of engagement. So the market, when it got triggered, you see, it played with our emotion because see, when it comes to money, money has a way that it wants you to be really involved with your mind. And when you are involved with your mind, it's going to really be tough. It's going to really be tough. And if you have not grown toughness, if you have not grown skin toughness or emotional toughness, you will definitely close your trade. One of our protege, one of our clients in the community was talking to me about NZDCHF, how it was a massive profit, and because he retraced back to his entry in one of his accounts, he closed it. And on his compounding account, he didn't close it. But for me, I just smile because no one can teach you this. And this is one of the challenges I have with a lot of gurus outside there. They feel that it is all about strategy, and a lot of you have bought several courses or strategies, but you see that until you grow the toughness, because see, the essence of Forex is to multiply money. It's not just only to make money. And because there's a multiplier effect, the emotions are needed. The right mindset is needed for you to be able to make the kind of money you want to make. The first time I made close to about $100,000 trading, I was not myself. The same way when I make $1 million trading, I'm still not going to be myself because I have never made $1 million from trading. So you need to understand how this works. Now, have I made $10,000? Have I made $100,000? Yes, I've made all of, but I've never made $1 million. And the day I make $1 million, it's going to tell on my mentality. It's going to tell on my emotions, because I have never made that kind of money at once in the market. But will I make it? Yes, I will. And I need to build my capacity to that level to be able to make that kind of money. And so stop coming into the Forex market because you see some people make the kind of result that they are posting. Some of them are even using prop account. And prop account means that they will give you capital to trade on. And you can see them flip, show you on $1 million, $500,000. Some of this money is not even their money. So don't see, guys, when it comes to this space, you are the one competing with yourself. It is a battle between you and I. That is you and yourself. So if you want to learn it, you need those two people, those entities, which is you and I, you and yourself, to be able to deliver that. Okay. So for me, this is the essence of trading. Okay. So right now, when it went back up, this affected a lot of people and they were not happy about it. But guys, the rule of the game is to be patient. Then eventually it dropped. And when it dropped, it broke TP1, it broke TP2. Then you now become an expert because it went deeper. Now, this is now another person's challenge. When you see this kind of trade going down, you always think I will keep going down forever. But right, yes, you're right. It went as far as 1 to 20, over 1 to 25. Fantastic. Right now, if you don't take any profit, there's another, there goes another issue. You need to always take profit. So when I tell you that I'm holding a trade, I've taken TP1, I've taken TP2, I'm holding maybe 2 or 3 more positions, which is a fraction of my risk. And that is it. Yes, it could be, the risk could still give me as much as $20,000, $50,000, but it's because of the kind of lot size I'm using. So, but you guys need to understand that this is needed for you to be excited in trading. And when it got to 1 to 25, guess what happened again? It came back to the top. It came back to the top. And this time around, when it came back to the top, it came back to meet the other engagement here, which is the drop, base, drop. Whoosh. And what do you do? Again, we look for another sell opportunity around that zone. And around that zone where we got that, there was an amazing entry opportunity that the market gave to us for us to be able to pick this entry. And this is this entry right here. Good. So what happened again? You see that the market on 30-minute time frame, you can see that it created a low and a higher, a low and a lower high. And at this point, this makes a lot of sense for. Now the market did what? Broke down the rules. Good. Right now we go in on this sell right here. And our stop loss is about 10 pips of this because you have a rally base drop. So this is the entry right here. So that's about 10 pips. Good. What again? 1 to 5, 1 to 10. You bank that again. So right now, it gave us about another 1 to 20. But because we are on a monthly zone, we know that the market is just playing with our emotions, right? When it is ready to sell, it's going to take its lift down into this place. And from where we are right now to where it's going, we still have over 1,200 pips to go. Over 1,000 pips to go. And this is where the money is. Over 1,000 pips to go. This is where the money is. And you have to now be patient. You have to be patient to see the market deliver what it has promised to do. So let's say, Mr. Mayowa, what if this trade retraces back, which is what a lot of us are always afraid of, and which makes us to end up closing the trade? Yes, if it ends up coming back and hits you out, you have made profit 1, profit 2, profit 1, profit 2. 1 to 5, you have banked that. 1 to 10, you have banked that. 1 to 5, you bank that. 1 to 10, you've banked that. Then it comes to hit your take profit, your break even. Then that's the end of the trade. Look for the next one. No emotions, guys. No emotions, guys. And if it keeps going down, you celebrate the victory that your emotions have given to you. That's it. You celebrate the victory that the emotions has given to you. Now, if we hold on this trade to this place, it is 113 risk reward. That means I'm risking $1 to make $113. I'm risking $10 to make $1,130. I'm risking $100, guys, to make $11,300. And if you're like, you have a huge capital that you've understood the strategy, you're risking $1,000. Come on, to make the kind of money you want to make. That's over 100,000 US dollars. But guys, will it be easy, guys? Will it be convenient? This is where the issue is. This is where your mental toughness is. So it's going to be like this. Watch carefully. Ooh. Ooh. Then it goes up again. I love this trade. Oh, I should have closed it. Oh, thank God I didn't close it. Oh, I don't like it. I should have closed it. Thank God I didn't close it. Then it goes back up. Finally, I need to close this trade. Oh, thank God I didn't close it, till it gets to where you're going. So apparently, this is the journey that you need to master. And it's the journey of the mind. And you have to really, really build up your mind. Okay, so that'll be all for today. An update on the AUDCHF that we've been holding since the beginning of this month, exactly around the first week of May. Okay, second week of May, we've been holding that, and we've been holding that in the trading community. And I'm really pumped up about that. A lot of us in the community are really holding that trade. And this is what I expect you all to do. So you need to master your onions. You need to understand the process. You need to know what to do, when to go in and when not to go in. You need to be consistent and understand your process. And because it is a process, all you need to do is to repeat again and again. Look at it. He's one of us holding the trade, AUDCHF 0.02, and he's doing $24. That is over $100 right there. And that's what we're talking about, okay? That's what we're talking about. So it's all about you. This is it. So this is it. Great guys, this is it. This is it. See, the 5th of May. Look at, I counted the Wyckoff, that's an advanced stuff though, you know, but that's met the condition, and it came back here, TP1, go back up, TP2, and TP3, you leave it to go. That's how we grow in the community. So as a matter of fact, we rarely pick trades every month. Just our goal is just about between 4 to 10 trades a month. We don't do everyday trade, but that's how we rock and roll. We grow our money, and we're good to go. I'm going to be posting a short clip of what people have done in the group. You know, some people have done 30%, 100% of their account. Some people have done 112 or 113% of their trading account. That is what is achievable. But guys, you need to be smart at your entry. You need to be smart at what you're risking and be willing to grow with your strategy. That'll be all for now. My name is Owolabi. If this is your first time, make sure you click on the subscribe button and make sure you don't miss out in any of the forthcoming video. I look forward to your success, guys. My name remains Owolabi. Peace out, guys. Bye for now. Let's go.